Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special Flashcast podcast episode, I'm being joined by my healthcare equity research colleague, Robert Sassoon, to discuss the lure of NASDAQ for biotech listings in the U.S. Good morning, Robert.
Good morning to you, Tim.
Robert, what structural and cultural factors make NASDAQ the dominant listing choice for biotech firms compared to NYSE?
Okay, so Tim, Nasdaq's dominance as the primary venue for biotech is rooted in its reputation, the exchange's reputation as the cultural home for innovation technology. So structurally, the exchange offers a specialized ecosystem where more than 90% of US listed biotech companies actually reside, including approximately, I think, 420 pre-revenue or clinical stage firms, compared to just around 40 on the NYSE American, which is the small caps sub exchange of the NYSE. So culturally, while the NYSE is home to the majority of big pharma giants, I think eight out of the top 10 global giants are listed on the NYSE as opposed to the Nasdaq. Nasdaq is viewed as the preferred environment for smaller, innovative, more nimble firms. So Nasdaq has cultivated a deep, self-reinforcing life sciences ecosystem. Its flagship Nasdaq Biotechnology Index (MBI) admits only Nasdaq-listed biotech and pharma companies, and I think as of the end of last year, there are around 262 constituents. And that index really currently anchors biotech-focused analysts, specialized funds, and sector-specific benchmarks. Nasdaq's own research notes a historical 98% win rate in attracting US biotech IPOs, so that underscores the sector's long-standing preference and network effects. I would like to add that over the past 5 years, there have been around 130 voluntary transfers from the NYSE to the Nasdaq, which those numbers include actually the likes of Walmart and Kimberly-Clark, which are really old world names that have become new world names. But out of that 130, only three biopharma companies have transferred. Helus Pharma, which is the rebranded Cybin, is the latest amongst them. So all in all, that's only 2% of the voluntary exchange transfers that have occurred since 2020. And why is that? Because most of the publicly traded biotechs trade on the Nasdaq to begin with.
That's really interesting, Robert. I know our listeners will appreciate the granularity of that answer. To what extent does access to capital, whether it be through mechanisms like secondary offerings or ETF-driven liquidity, ultimately drive the decision for biotechs to list on NASDAQ rather than NYSE?
Well, access to capital is the critical factor influencing biotech listing decisions, I believe. Nasdaq provides deep liquidity supported by biotech-focused ETFs such as IBB and XBI, which primarily track Nasdaq-listed companies. Now, this ETF-driven liquidity enhances trading volumes, investor interests, making it easier for companies to raise funds through secondary offerings. Nasdaq's infrastructure and established investor base also allows biotechs to execute follow-on financing quickly and efficiently, which is really essential for companies that anticipate multiple rounds of capital raising before reaching commercialization. Now, in contrast, NYSE American lacks the same level of liquidity and sector-specific investor engagement, making Nasdaq the more attractive option for biotechs prioritizing capital access. Now, in the past year, the NYSE American has taken bold steps to compete with and in some respects surpass Nasdaq, though not enough to retain the likes of Cybin or Helus Pharma, as it's now called. Nasdaq continues to offer key advantages for biotech companies, chief among them access to capital, while the NYSE American introduced a 5-year holiday on secondary offering fees effective from April of last year. It still falls short of Nasdaq's unlimited zero charge policy. So Helus, for example, if it stayed on the American, its fee-free window would have ended in August 2026, as it was actually listed on that exchange in 2021.
Most interesting. We've seen voluntary exchange migrations happen quite frequently, but in your opinion, does it really matter in the end from a valuation perspective, Robert?
That is the $64 billion question, the impact on valuation. So voluntary exchange migration often serves as a valuation catalyst by correcting lagging recognition through increased institutional exposure. So the most notable success story amongst the biotech companies is Amneal Pharmaceuticals, which saw its shares climb 55% within the first year of its NASDAQ move and more than 150% since the initial transfer announcement in December 23. That's 2023. Now, this growth was fueled by MBI inclusion, which boosted visibility, and that was really the main purpose for Amneal to transfer from the NYSE. However, migration is not a panacea for smaller firms like IBIO. The listing facilitated a 50 million capital raise. That was good. So that happened soon after its transfer in early March 2025. However, IBA share price, while it surged 75% from the mid-February announcement last year to the transfer date, its current valuation is significantly below the levels seen at both of those earlier points. Helus, which trades under the ticker HELP, is trading around 20% above its price at the time of announcement of the transfer in December 2025. So while switching exchanges can improve technical factors like ETF inclusion and analyst coverage, long-term valuation ultimately depends on clinical progress and execution. I would say that NASDAQ does offer a more engaged investor base for biotech milestones if they're achieved.
That's great, Robert. Very, very insightful comments. I appreciate your time today and be well.
Thank you.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.